Hey, everybody, it's Pete Carmasino with Chaikin Analytics here on StockCharts TV. It's our halftime show here. We do this every week on Mondays. So welcome and appreciate the feedback. We've been getting a lot of feedback and getting a ton of views on YouTube, so really appreciate that. And type in some questions. We can talk about, kind of some of the things that we see here, but we can't get into too much detail one-on-one. But we're going to look at some really interesting names today, ones that we saw last year that were the darlings and then became the dogs. Darlings to dogs is going to be the title today. So they're the meme stocks of 2021. We're going to go back and look and see how they charted and what they looked like and when they changed on the chart, when the power gauge could have helped or not. And there's actually one name in here that looks still pretty decent. I guess it just got carried away. It was Avis, budget rent-a-car, symbol CAR. And it still looks like a good actual company. The stock just got out of control. I think it was one of those short squeeze names as well. So let's dive on the charts and take a look and see what we can identify as some of the turning points in 2021. Okay, here we are on the ACP platform, and we're going to be swapping back between ACP and Chaikin Analytics here, and I've got the names of the stocks I want to review. Now, I know I don't have every meme stock in here. I'm sure I missed several that you might have liked to see. So again, put them in the comments of names that you may want to look at next week. We'll try to get to those as well. But I have the sort of the usual suspects here. That's easy for me to say. So AMC and Gamestop here, and we'll take a look at kind of what happened here. I mean, here's that parabolic move that you saw, followed by sort of a failure here, and not even really a double top, just a lower high, and then obviously just a series of lower levels here until the breakdown occurred once again on a name like AMC Entertainment. Now, I'm not picking on AMC. Look, they've got a cool little business model, excellent services, and it's a lot of fun if you're into that. People have just gotten into the game of staying at home, right? And we've got some amazing equipment at home now. Sound systems have kind of come a long way. But my point is that we were never really bullish on the name until, after this March level. And that's when the stock was really at single digits. When it started to get out of control and earnings per share started to change, we actually downgraded it on fundamentals, right? And how do I know that? I know that because it's actually below our long-term trend, and we're neutral on it. I'm sorry, it's above our long-term trend, and we're neutral on it, right? And that tells me that we were downgrading the fundamentals. Money flow was negative until right here. It popped, but relative strength, alerted you to a change. There's no doubt about it. But when it started to break down somewhere around this $32 level, okay, so from really this area of $12 or even $10 to $32, okay, there was a trade there. But at the same time, once it started to break down, we started to downgrade, and it really started to break down when relative strength started to break, which is right around, again, 42. But you would know this because you've got a change in trend, right? So from neutral to bearish. And when you see that on the ACP platform, when you see this move from neutral to bearish, you know that it broke our long-term trend. So that's the little secret there. All right. So pay attention to that. Use that to your advantage if you have the system. If you don't, go get it. It's not that expensive. It's just, I think it's almost like one extra month of StockCharts. So the value there is amazing. So we'll look at the next one because I want to make sure I touch base on GameStop and on AMC. And this one, I mean, this was an incredible situation, right? Obviously, it came out of nowhere. Now, I don't know if a lot of people know this, but when people were opening accounts at Robinhood, they were giving shares away of GameStop. I don't know if that ever came out in the news, but remember they had a little thing like join up and you'll get a couple of shares of stock. So what were they doing? They were finding the cheapest names out there and kind of giving you one or two shares. Turned out to be an incredible situation, and it's likely why this even became a meme stock. If you think about it, right, it kind of alerted all the new Robinhood users to this name, and maybe they started to do a little due diligence on it. Now, this got carried away here about a year ago, right? It hit as high as, I'm not even sure if it actually printed 500. I know it did pre-market, but in the actual trading, it doesn't look like it got to that level. It looks like the high was 483, okay? So that's in January of 2021. Let's go take a look. This one's all the way at the bottom of our list. And, when this was happening, it's already past my 1-year level now, obviously. We were seeing, obviously, we were actually even bullish on the name. We changed trend, got a negative earnings, right? And then we went to neutral. Now, we went to neutral before it took off, and that was because it was a fundamental change on our rating. Obviously, it didn't get downgraded because it took off, right? It stayed above our long-term trend. And really, really, it started to change trend, I'd say, arguably somewhere around the $200 level. And that was a second change in trend, basically after around the same price, about 165 or so. So we look at this name, go back to the 1 year. It's a little easier to understand. You can see this not very, very insignificant relative strength on the upside and back and forth, and was a tug of war. And it really started to break down right around that $200 level, right? So when you start to see those names shuffle back between neutral and bearish and neutral and bearish and neutral and bearish, you know that it's oscillating above our long-term trend and below it. And then it obviously had broke down. But in the grand scheme of things, this was sort of a very range bound for many parts of the end of 2021 anyway. And then obviously here on 2022, we started to see that breakdown start in November. Okay. Let's get to some more fun names here, like BLNK Charging. Now, this is a interesting name. Obviously, this is the infrastructure play for electronic vehicles. Hey, they got to charge, right? Or else you can't get anywhere. Again, an excellent name. It traded very high. I think it even got as high as 60. And if I go and look at the chart here on BLNK, right, we were never really bullish on the name ever, right? We had to be neutral because it started to trade higher. But when this relative strength started to break down around the $40 level, it never looked back, really. There was fits and starts here. I think that was part of the passing of the bill where they said the infrastructure bill was going to allow for X amount of billions of dollars for new charging stations. But that was really a false breakout, and it kind of broke trend again. And even the second trade was right around that $40 level. So we pegged 40 as an area that you should have been either avoiding the name or getting out of it. Now, again, it was bullish beforehand, and when it gets out of control, our valuation metrics sort of downgrade the stock because it's way overvalued, and it did get as high as $65 about a year or so ago. But you could see where that relative strength broke down and really never got back around the $40 level. Here's the one I said, Avis budget rent-a-car group. Now, this is not Hertz. I'm not charting Hertz because we actually don't rate it. But if I look at Avis budget, again, an interesting name, a $94 stock that traded as high as $543. But that was the short squeeze. That was the meme craze kind of pushing this stock higher. And we were actually liking the name. We actually still do have areas of bullish opportunity on it, but it's below its long-term trend. The money flow has just switched. That was an excellent opportunity there. 261 money flow has been negative ever since. And obviously, once we broke down right around this level, this $200 level, it got as low as 160. Now, not as dramatic, partly because if you start to look at the fundamentals of this particular name, it probably has a better business model. And opportunity here is probably on the rise in coming months, but it doesn't need to be as dramatic and highly volatile as this particular period of time. So use the power gauge. If we get an upgrade, if we catch an upgrade here, and things start to change when their earnings release, which are next week, pay attention to it. Let's look at ChargePoint, another charging station name. Obviously broke down. We can go back and take a look at this particular chart here. It's one of the lower rated ones here, very bearish right now. And again, relative strength breaks down around $31. Stock trades all the way down to 11. Okay. So it loses quite a bit of money here, more than 50%. And obviously you can see that the rating was back and forth, was bullish a little bit here. It kind of had a head fake. That would have been negatively impacted right away, right around the same price that it went bullish. And obviously, as the downgrade came in with bad earnings, it just got worse from there. And if we look at Fiverr, this one, I'll tell you, this is one of the names we called out early on, right around the early relative strength change. I want to say it was around a $300 level. Let's see, right here. Yeah, 250 or so. 250 or so. Right. And it was just coming off of that $300 area and kind of broke down, but never, ever looked back. Predominantly bearish and continued to stay below its long-term trend. So it had fits and starts here. You know that if it changes on the ACP platform to a neutral negative, you should remember that if a bearish stock trades above its long-term trend, we upgrade it on price action alone, not on fundamentals. Let's look at Ride, Lordstown Motor. I'm jumping around here because I want to take a look at these names on the chart real quick. I'm running out of time again. Now, Ride's neutral rated. That's interesting. We're not in love with the name. Obviously, we don't have a bullish rating on it. We've downgraded it. But, you know, Lordstown Motor is owned predominantly by, or a good portion of it by Workhorse, maybe 10 or 20%. I can't remember. But if you look at the name, it's just been a terrible ride down, really, no pun intended. We didn't rate it, obviously, at the IPO. We're kind of rating it now and just beginning on a neutral setup here. But again, it's above its long-term trend. We've got earnings coming out in March. It does not look to be in great shape. But this chart, not only on our system, but even on the ACP system, using many technical measures, just doesn't look great at all. Okay, the other one is Workhorse. I want to jump to because they own a portion of Lordstown. And here's a name that really was slated to win the U.S. Postal Service electric vehicle market opportunity. In other words, when the Postal Service was thinking about changing to electric vehicles, I believe Workhorse was one of the folks in the running. Now, here's a name that the relative strength didn't get downgraded until around 22 or so, but we were rating it bullish, and once it broke down, that's our breakdown level, and the stock has really been downgraded again from a $26, $27 level all the way down to $3. So even if you had traded it and had some wild times in this name when it was breaking out and, you know, ripping higher and all of those opportunities that were happening at the same time, the relative strength change really broke down, which then broke down the rating. Again, when it goes from bullish to neutral, you know that it's breaking down. So if you're watching it on the power gauge here, again, we're neutral. Look at earnings and technicals are just in bad shape here. And it's a name that you got to just be careful of. Let's look at Upstart, and then we're going to have to end it there. I couldn't get to all of them. I apologize. We'll look at Upstart. Upstart's not even actually a name that we've rated very long. We started rating this one a little early, but again, the relative strength breakdown at 280 was really the area to get away from, and that really has started off with a bearish signal. So this is a name that you want to pay attention to. You know, in the future, when the ratings are starting to change, you want to be cognizant of that fact that if it gets to a neutral negative, that means it's still a bearish name that's actually getting some upside due to price action only. Okay, price action only. Okay, I'm going to have to end it there. Okay, everybody, where does the time go? That was so fast. I didn't really have enough time to kind of finish out. So I do apologize, but thanks for tuning in. Again, leave me some feedback here on the YouTube channel. We appreciate you tuning in every week. We'll be back next week with a halftime show here on StockCharts TV. Again, I'm Pete Carmasino with Chaikin Analytics. Take care. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.